So mixed U.S. jobs numbers. Interesting. We were expecting or hoping for, or the U.S. was hoping to see, the president was hoping to see some really strong U.S. jobs numbers. And what did they get? They had weaker jobs numbers. And again, it's a bit of a mixed jobs report. You couple that with a pullback in inflation. And what do you have? Well, you have a situation where the Federal Reserve will possibly continue to focus on jobs, job creation, which is one of the things that they focus on. As we say often on our show, the Federal Reserve has a dual mandate, and it's jobs and inflation or stable pricing that they focus on. Our first chart shows a month-by-month chart. There you have it, of the jobs numbers, pulling them up there. There you have it. We were up or positive 64,000. Prior month down 105,000 for October. Then even though, again, the government shutdown, tough to get a full read or an accurate read, but that's what they reported. A positive number in September and then a negative number in August. And you can see the flip-flopping that has been going on in the U.S. economy with respect to jobs growth. So something that the Fed obviously does not like to see, something that the President of the United States does not want to see as well. So President is definitely pushing for lower and lower rates. A lot of members of the Fed, including Waller, who we had on as a possible candidate to lead the Fed starting in April, or starting in May, I should say, starting in the springtime. He also is saying that they can continue to cut rates, but very measured and a very measured pace. So a mixed jobs report, weaker inflation. What does that lead us all to believe? We're going to see lower interest rates in 2026. And that, coupled with some tax cuts that were announced with President Trump's one big beautiful bill, no tax on tips, no tax on overtime. These are the things that many are hoping can help stimulate the economy, and with that, stimulate the stock market to another positive year in 2026.